Alrighty, guys, back again. Been a while. So as usual, look, we'll start with the US dollar. We have seen it cool off for a second consecutive trading day. It's just a bit of a retracement, or it appears to be a bit of a retracement. Still, there's a lot of bullish sentiment surrounding Donald Trump. Look, the new elect, and also along with the geopolitical tensions we've got going on, Russia, Ukraine, the dollar is a safe haven. This might not be cooling off anytime soon. We are still near 2 year highs, so that's something to keep in mind. There's always a lot of activity and a lot of volume, especially around highs. And considering 2 years ago was probably we were still, getting the activity from COVID as well. So that's near COVID levels that we're talking about here, guys, on the dollar index. So yeah, that's something to keep in mind. So fundamentally, it's still looking very, very strong. Again, uh, the market has just shown great support for Trump. The market does see Trump as bullish for the US dollar as a whole. But yes, we did have that cool off yesterday. But again, still around 2 year highs. So not overly concerned about a massive retracement quite as yet. That being said, though, as strong as the dollar is, we may see a bit of consolidation now. But again, fundamentally, still pretty sound. Also, seasonally, the dollar tends to do well in the first quarter, and we've just started the new year. Anyways, let's move on to some technicals. Let's pull up this chart. Alrighty, let me get my little chart up for you guys. All right, so 108.97, that's a 61.8 fib level. Very, very important there. Another big level is 109. Just round 109. That's a big psychological level. Look, if we get a break through these levels, we might see the dollar continue, to skyrocket, especially with Trump being in power. Some other key levels to look at. We've got some big support at 108, even number. 108, nice and even. Again, psychological levels. The market tends to test these levels and have oftentimes quite strong reactions at these levels. And we've got the 25-day moving average at 107.54. So again, those are some technicals to keep in mind. Whether you're a swing trader or you're like myself, a scalper, you'll be there intraday. Those are some very, very key levels, and obviously for positional traders as well, who are still in long positions or even looking to short. But yeah, dollar index in a nutshell, still looking strong. We may get some consolidation in the coming trading sessions. Alrighty, let's move on to the next one. Alrighty, what do we got next? All right, let's take a look at the yen. This one I'm personally interested in it as well. Again, US dollar yen, it's another US dollar story, right? We've got Trump, bullish sentiment, obviously, some hawkish sentiment from the Fed. We've also got Bank of Japan, sounding a bit dovish there. Again, just lots and lots of US dollar strength, right? So obviously we've got some key levels we're getting up to here, and we could possibly see multi-month highs on the US dollar yen if the US dollar strength keeps up. So yes, no. So in December, obviously the services sector had an expansion for what was it, the second consecutive month in December. So obviously that's something to look at there. We've got geopolitical risks. There's also some concerns over Trump's tariffs. So again, it's prevented some aggressive yen selling there. And also we've got speculation about potential Japanese government intervention that also could limit further declines. So that's just something to keep in mind there. Personally, I don't have quite a stance on this as yet, but I'll give you guys some key levels if you are trading it. But there is all that information that I've just given you earlier, so hopefully you can make more informed trading decisions. I've sort of just been watching this and looking at these key levels like 158, psychological level there. And it appears that we're forming a bit of a double top, or whatever chart pattern you'd like to call it. There's some resistance at 158.07 to 158.08. So that's December 26, December 28. A lot of people saying it's a double top, and, whatever chart patterns you use or whatever you use, if you want to call it resistance, that's entirely up to you there. But those are very, very key levels. And we've also got some major support at 157. That's the Asian session low. Additional support at 156.65 and 156 even right there. Just remember what we talked about earlier: even numbers, round numbers, psychological levels. Market tends to react a lot to those levels. So key things: if 155 is broken, it could shift the bias. It could shift the bias a lot there. So if 155 is broken, we could see a little more downside on the US dollar yen. But as of now, it's looking strong. If we break again, if we stay above 158, big level there. And 158.85, huge weekly barrier there. If we break above those levels, US dollar yen, obviously, it may just keep going up, right? So again, trade with caution, particularly if you're going to be on the short side there, or if you're going to be long, regardless of what your stance is. Those are some key levels to look at there. Alrighty, and next we'll take a look at gold. Gold is one of the most traded things, especially for our clients here, simply because of the volatility, right? So yeah, I guess it's important that we look at gold today. We haven't talked about that in a while. So Monday, we rebounded off 26.14 after a sharp fall and went to 26.30 there. The 10-year US yields, which is something that is very, very important to look at. So when yields go up, gold generally tends to go down, and that's one of the few fundamental things that gold has going for it. That, and obviously geopolitical tensions and other things like that. So yeah, the yields remained above 4.6, which limited the upside for gold, and we faced a lot of resistance at 26.40. During the Asian session on Monday, following obviously the strong PMI data that came out, which pressured those gold prices. So we've got December market data for the US coming out Friday or Saturday, depending on which part of the world you're from. Some obviously the geopolitical tensions there that could move the price as well. Those are two things. And central bank buying is expected to continue with net purchases of around 8 million ounces in 2025, similar to 2024. So yeah, those are the things that are going to move gold there. We'll take a look at some technical levels as well, just to help you guys sort of, frame a picture or have some parameters within your trades, whether you're swing trading, short-term scalping or positional trading there. So RSI has recrossed the 50 level, obviously indicating potential for further gains, again with the geopolitical uncertainty, Russia, Ukraine, and also Israel and Palestine there. So we've also got a key level at 26.2750. That's the 100-day moving average. If buying momentum continues, upside looking at 26.59.60, 65-day moving average. So yeah, those are some key levels there. Another key level, we're pretty far away from it currently, 2600, huge psychological level. So if you're looking, to short the breakout there or potentially buy, that's a key level for you, or regardless of what position you're in. And then 2602. 80 is the December 31st low. Very big levels there. So a daily close below maybe 2600, it would negate any recovery momentum for gold. Look, unless the data that comes out is negative for the US dollar, or the geopolitical tensions continue to tighten there, we might see gold fall a little bit further. But again, regardless of whether you're in longs or shorts, trade with caution. Keep in mind those levels there. And look, another level for you guys, 25.8340, December low, right, for all of December. But again, trade well. And if you're trading tonight, you're a day trader like myself, wish you the best of luck. If you're in positions, I hope you are profitable. We will see you tomorrow.